In my previous video, I mentioned that VAS was a sell, and when it comes to looking for replacements, I put some two ETFs forward and said VGS was undecided depending on what the currency does. Now, you may be wondering, why is that? Now, my question to you would be, if you're in a balanced or growth option in your super, your fund tracks this ETF effectively, the VGS. So your super fund returns in the international part grow according to the value of this. Now, that's why your super fund returns have been supercharged because, and please tell me if you guys knew this or you didn't, but the super funds don't hedge their position. So what that means, the returns will vary according to the Aussie dollar. And as I'll show you, a depreciating Aussie dollar against the US dollar will magnify your returns. So what happened last year was the actual share market, the VGS actual shares, returned 15%, but the Aussie dollar dropped by an average 7%. So that's why the international growth option returned 22%. 15 from the shares and 7 from the Aussie dollar dropping. I'll just show you something else. So this is the same basket of shares, but this is the VGAD ETF. So this is hedged. So it's got nothing to do with if the Aussie dollar can go up and go down, and it doesn't impact the performance. And as you can see, this looks a lot sicker than the VGS. I'm sure you can agree with that. Learning to read charts. We've got a double top here, about to break the trend line. So that's why I think the US market, if it drops below here, 103 point, call it 104, then I think we're in for a bit of a correction in the US market shares. So over there, I'm sure their share market's going to go down, but if the Aussie dollar keeps going down, then that could compensate. And so their share market goes down, the Aussie dollar goes down, then this will hang around here. Hence my indecision as to what to do with VGS, because it's not a clear sell, because the Aussie dollar might keep falling. And if you take a look at the Aussie dollar, so this is this is September 24. So not so long ago, it was trading at 68 US cents, and it's been smashed all the way down to 62 cents. So that's about a 10% drop, but from the super fund's point of view, it's averaged over the whole year, so it's averaged about a 7% drop, which is why the returns have been kicked in. So the big question on this one, because if we look back at the Aussie dollar, you can see where back at 2015, you could have got 80 cents for the Aussie dollar. COVID hit, it went down to 57 cents, then ran back up to 77, 21, and it's been a downtrend channel, but it's at major support. It could go either way from here. It could quite easily fall down. It'll be driven by the iron ore price. If you look at the iron ore price chart, it'll look like this, which is driven by China. So if China falls in a heap because of tariffs, then Aussie dollar is going to fall down, and your unhedged version in VGS will get a kicker from the Aussie dollar going down. But if the Aussie dollar goes up and the share market goes down, then it's the exact reverse. So say the Aussie dollar bounces back up to here, So i.e. it gains 7%, so there's -7 to begin with. And if the share market drops 10%, then you're looking at -17%. But yeah, I go back to, I'd be so interested to know if people actually knew that in your super funds, that it's unhedged. So my preference is to play the unhedged game, because then you don't have to worry about currency fluctuations. But the fact is, my competition is these super funds. So I can't, I have to recommend unhedged. With Aussie share options, it's a no-brainer. You don't have currency risk. So my outlook on it would be to stay in unhedged until we get some nice green candles like this happen back here. Got some nice big green candles, and that would indicate that we're going up, and that's when I would switch to the unhedged version, being VGAD. Because if the hedged version goes down, then at least if you're unhedged, it's not going to, you're going to miss out on that -7% and get a +7%. It is very confusing, but it's, yeah. Both Australian Super and Hostplus have unhedged international share options. So that's why the conundrum is whether I would say to sell VGS or not, because it comes down to what our Aussie dollar is going to do, and it hasn't made up its mind yet. So please leave a comment if you think you were in unhedged or hedged, or you never thought about it, or what you would do. Yeah, leave a comment. Thank you.